Well, let's move on then and let's shift focus to our special segment, Quarter Se Quarter Tak, to get you expectations from every sector. Today, Vinnii is joining us. She's going to tell us what we expect from capital goods. Vinnii, over to you.
Hi, good morning. So in terms of capital goods, this time we're expecting a mixed quarter coming for the capital good players in September quarter, end of 30th September. Now, a robust order book, that is what we're going to be starting with. That will start converting into higher revenues, and selective companies will see margin expansions. Talking about the order inflows now, in terms of order inflows, they're expected to see a bit of a drive coming in, and that will be something that will be driving the narrative of Q2 FY26. CG Power, that is expected to stand out in terms of order inflows, 27% growth on a year-on-year basis, and closely followed by Hitachi Energy, 17.8% YOY growth is what one is expecting there. Siemens is expected to deliver an 11% increase in terms of order inflows. Now, looking at ABB, they're expected to see a steady progress as well, while Thermax, that's where we could see a bit of a moderation coming in terms of order inflows, a decline of 11%. BHEL, a decline of 29% is expected in this quarter, maybe because of the legacy headwinds they're facing in terms of the orders. Now, other than that, when you talk about revenues, revenue conversion is expected to be good, and the backlog of the order book that is there, that will be something that will be supporting the overall revenue growth for the companies. Now, broad-based growth is what we're expecting across all the capital good players. CG Power is going to be taking the top spot with 36% growth expected there. And then moving on, BHEL and Hitachi Energy are 19 to 20% growth is what we're expecting there. Now, coming to Cummins, ABB as well as Siemens and Thermax, that will be providing some bit of a mid-single-digit to high single-digit growth is what we're expecting this time from these companies. Shifting focus to the margins. Now, that's a very divided story among all these companies. Hitachi is expected to see a very good margin expansion, 500 basis point. And then following, obviously, CG Power, Cummins, Siemens, all of them are seeing 90 to 60 basis points, somewhere in that range is the expansion expected there. But what is not expected to do well, ABB, Thermax, BHEL, in terms of margins, they are expected to see a compression coming in this time. Commodity prices and some of the legacy project issues for BHEL is one concern that comes in, especially over there. Now, overall, just summing it up, Q2 FY26 expected to be a mixed quarter supported by strong order book backlogs, broad cost rationalization that will support the margins, moderating commodity inflation is supposed to support the margins as well. Execution, that is something that everyone will be keeping an eye out on. Private Capex story, where is that headed? As well as in terms of prolonged monsoons, has that impacted the EPC side activities? That will be key to watch out for. Valuations surely have moderated from those peak levels, and that is indicating that slowing order inflows that one has seen coming in. Capex spending reduction over there as well. So keep an eye out on that. Only Hitachi Energy as well as CG Power are seeing some of those premium valuations, but they've come off the peak as well.
Okay, all right. Thank you very much for that, Vinnii. That's a comprehensive wrap, and it sets us up for our conversation with Harshit Kapadia, Vice President, Industrial Defense, Railways and Consumer Electrical Space, as well as Durables. It tracks a whole bunch of these Capex-intensive companies and stocks at Elara. Harshit, thank you so much for joining in. So let's start with the big boys from the capital goods space. Let's get your highlights and trends. Purely in terms of good execution, a pickup in growth, which are the companies that will perhaps shine in Q2 and going forward in H2 as well?
So companies which will see a very strong growth are mainly power equipment related companies, because they have a very strong order book and largely driven by government as well as the power capex which is ongoing. That would mean companies like Siemens Energy, Hitachi Energy, GT&D, Quality Power, power industries, so cable and wire companies. These are some segments and companies which will see a very strong growth. Partly we have seen KEI and Polycab reporting their numbers, which has been in high double digits as far as volumes are concerned.
Okay, so some of the power equipment makers would be in double digits. Got that point. And what about the margin profile? I mean, are you expecting any significant changes in Q2 or Q3?
So as far as Q2 is concerned, we think margins for at least the equipment companies, the power equipment companies, should be better. Though going forward, that is in H2, we are expecting competitive intensity to increase, and especially we are hearing Chinese competition is also slowly increasing in some of these segments, which is something which we'll be watching out for very keenly. Hence, H2, there could be some pressure But given that revenue growth momentum would be there, assuming that raw material stability is there, margins should be in the range of around 14 to 15% for most of the names.
That's interesting. Chinese competition in which segments and what kind of, what part of the power chain that you're anticipating in H2?
Mainly on the power equipment side, that is from high, medium voltage, and partly some of the HVDC projects as well. So there has been some rise in competition.
Okay. The good thing is, from an investor perspective, Harshit, that these stocks are now, they're a little off the peak. They were all quoting at 90 times, 100 times forward earnings, right? At the peak of the whole Capex bull market. How do you find the valuations now? Where is the risk reward the most favorable? And what are your top picks?
So valuations are still high. It's not very high, given that the order inflow momentum has been a bit on the weaker side, except for power. There has not been much growth as far as Capex is concerned, especially the private sector Capex. So we would still expect some moderation to happen as far as valuations are concerned. Though there has been some activity happening on the transmission side. A week back, there was a report on the hydropower transmission Capex. They are looking at close to around 2 lakh crores of transmission Capex. Apart from that, the overall renewable transmission Capex is looking at close to around 9 lakh crores. So we have a decent pipeline as far as transmission is concerned. So EPC is one segment which will be very positive about. Apart from that, on the power equipment side as well. So within this, what we like is Case International. We like Siemens Energy. We like Hitachi Energy. And KA Industries. This is something that we like. Something that we don't cover and we like is Elecon Engineering, Quality Power, and Apar Industries.
Okay, so you like players on the EPC side playing the transmission story. Nothing from the bulge bracket big MNC power equipment makers themselves, the Siemens and the ABBs of the world?
So if you look at over last 1 year, a lot of these companies have transitioned away from the power equipment to non-power equipment because ABB got divided into Hitachi and Siemens got demerged with Siemens Energy. So large part of the portfolio for ABB India as well as for Siemens India is more towards private Capex. The trigger which could be there for Siemens could be on the mobility side. There is one large tender which is coming for the local trains, which is in Mumbai. They want to completely air condition it. That is a big tender which is going to come out probably in Q3 end is when we expect. So that could be a trigger for Siemens India. Apart from that, private side, it's a bit on a slower side at this point in time.
Okay, all right. And that's going to be an interesting one, yeah. I mean, fully air-conditioned Mumbai locals, definitely something to watch out for. It's going to be a big story overall. Thank you, Harshit, for flagging off all that we need to watch as we get into Q2 earnings with these companies on the capital goods side. Thanks for joining in. You have a good day.